What's up everyone, welcome back to another video. Before this video starts, I just want to say, guys, you've been showing such amazing support, and I know I talked about this in previous videos, so let's keep it going. Keep subscribing if you're new, and just stick around for this journey that we have. Our goal is to pay off all of our main expenses or living expenses like utility bills, mortgage, car bills, just through dividend stocks, passive income. So if you want to see how that unfolds over the years on this channel, make sure you subscribe and turn on notifications. So today I thought it would be cool to utilize one of the features for the web platform for Robinhood, which is to take a look at the 100 most popular stocks for today and see if they're any good or if they're just hyped up or whatever it may be. So before we get into that, let's take a look at our portfolio. I'm up $5 today, almost $6, which is 0.46%, and it's been good. After the trade deal, things have gotten a little bit more back into the bullish phase of the market, and overall we have been doing pretty well. And the most important thing is that we have finally overcome our little day trading dip that we had. And I'm so grateful because I know there's lots of people out there, it's taken them months or even years to make up for their past blunders with a different style of trading that didn't work for them. So we are up just $4 all time. So hopefully we can go even further than that, thanks to the little spike we had in the pre-market today. Okay, so if you go and log into Robinhood on the web platform, right underneath your portfolio, there's this thing called popular collections, and the first one is 100 most popular. All right, so let's go. All right, so we're just going to go over the top 10, and I think we should start from, let's just start from the top. Okay, so we got Aurora Cannabis. Very surprising, I guess, and it's down today. I don't really know that much about the cannabis sector of the stock market, but I know people like to compare it to Bitcoin, where like a couple of years ago it had that big hype spike and then slowly it just started to coast downwards. Yep, kind of like Bitcoin. Had its peak, 15 minutes of fame, and yeah, so I'm not going to really invest into Aurora Cannabis. And let's see where it was. It was at $10, now it's all the way at $2, because I feel like it's kind of like Bitcoin, as I said before. Not really reliable and kind of risky, but I could be wrong. Because I don't know that much about how it's doing right now. But I mean, I know that they've legalized it in most of the states in the United States. I think Canada legalized it, but they're not really into it. I'm not sure. But there's better investments out there is what I'm trying to say. You see, it's just been going down and down for the past year. The second stock is Ford. Ford is a stock that I wanted to add to my portfolio, but then I listened to people. They're like, oh, it's a little too risky right now because it's been on a kind of a downtrend. But recently I was reassured when I watched this channel called Our Rich Journey, and it's like this family who's trying to do kind of what I'm trying to do and make passive income and retire early with dividend stock investing. And one of the stocks in their portfolio was Ford. And what's very interesting and reassuring is that they're basically done. Like, they've started making enough passive income from dividends, so they've like transitioned to a more defensive portfolio, so less volatile stocks that are, guaranteed to give them dividends, not really focused on growth, and they're just letting the dividends reinvest themselves. So I look at that, I look at Ford, I look at what they're doing. They're trying to, join in on the electric car game like Tesla, because, like gas cars are on the verge of going extinct. Bad for the environment, lots of other reasons. So if they want to stay relevant, they have to transition to electric cars. So that's what they've been doing. That's what they announced they've been doing. And they've actually been increasing over time. they've been making a comeback. They're up only $1 in the past year, but at least they're up. And 5 years, that's when they've been down. But I believe that they can continue to go back up. Again, second most popular. And a pretty decent dividend yield as well, 6.33%. A little mixed analysis rating. I don't really try to look at this because, sometimes you got to do your own research. Our third stock is General Electric, and it's currently at 11.11. Make a wish. General Electric, it was one of those cheap stocks that I bought when I didn't have enough buying power when I first started investing. And let's see how it's been doing so far. It's not too good for the month. But in 3 months, in the year and 5 years, once again, not bad. Once again, not too good. Dividend yield is only, low dividend yield. You guys can look up the actual dividend yield because Robinhood takes some time to update those things. It still has a very high market cap. And of course, they do lots of technological and electrical, appliances and stuff like that. And they also do aircraft engines. You see, so they're pretty broad once it comes to the electrical and technological sector. Well, once again, not really a stock that I hear too much about, and not really taking the time to invest research into, because I'm into the more blue chip and stocks that guarantee growth and also provide a dividend. Like, this is way below the minimum dividend point that I want, which is at least 2%. Sometimes I have exceptions, but their stock price is way too low, and I'm not sure if they have anything innovative for the timing. I don't know about their financials and stuff, but you guys can look into that if you're interested. Number 4, we have Fitbit. Noticing a lot of stocks under $25, which is probably why they're the most popular, because these are stocks that people can just buy and sell like that. Like, they're under $25 so far. Fitbit was recently acquired by Google, and that's when the stock had like this tiny spike, and I had 3 shares at the time, and I think I bought a few more shares as soon as I heard the news, because I know even if it's not like a continuous growth, let me just take profits in that window of time when the price goes up. And then I just sold. And good thing I did, because after that, it's just been, see for yourself. Not much, because it's a less volatile stock. But you can see this is when it was acquired by Google in October, and then it just started trailing off like that. This was back in the day priced at around $30. No, 40, almost 50 actually. And then for some reason, just something happened. And I should probably should have started off with what Fitbit actually does. They create these smart watches, so I guess like to compete with Apple. But again, I don't think they're really going to go anywhere, because everyone knows Apple for the Apple Watch along with the iPhone, unless Google creates something. Like, Google has created the Google Pixel and all that jazz. So maybe they can create something and just revamp Fitbit and make it a key competitor with Apple. And hopefully that can grow the stock and put more investors into buying and going along with Fitbit. And maybe they can create a dividend and start paying out dividends to their investors. The 5th stock is GoPro. Again, a very low price stock, and I actually had this as well back in the day. GoPro, they make the cameras that you can attach to basically anything, and you can see from the person's first point of view, like if they're doing parkour, or they're skydiving or biking and or skateboarding, doing like little tricks, and it's like you're watching from their perspective. So they make those types of cameras, and they've been very popular. Lots of YouTubers use them, but their stock hasn't been doing too well over time, and it's kind of like Fitbit. Like, it started off pretty well. Once again, I really hope Robinhood adds the all-time things from when the company first went public, so I can see more. And then it just dropped. It just dropped, and it's just been dead. It's just been a dead stock for the past 4 years. So, yeah, once again, I don't think it's really worth it unless they really do something innovative. And I'm guessing that's why the stock went down, because, when you create a GoPro, what comes after that? Like, maybe they'll have to create a new product or something to stay relevant. Okay, now we have a stock worth talking about, Microsoft. And finally, we are past the $25 range. Now we're actually in the triple-digit price stock. Microsoft. What can you say about Microsoft? I mean, created by Bill Gates in the 80s. And millions, maybe even billions of people use Microsoft to perform their daily tasks all the time. It was a very reliable stock that I had in my portfolio, but I had to sell it because I wanted to buy more shares of a different stock. And it has given me reliable growth. It's not too volatile, but the growth was still there. And the week it went up $1, the month $6. And kind of part of the reason why I sold it was because of that. It wasn't a bad thing. I didn't sell it for a bad reason, like I said before. But I was like, there's more stocks there that are kind of more volatile, and it doesn't bother me because I'm not retired yet, so I don't have to invest defensively. And it's just been going up. It's kind of been like Apple, just going up. Tiny corrections like this, and it just keeps on going up. They keep on releasing Windows 8, Windows 10, and much more stuff. But I don't think they've released anything really big yet. I have to look into that more. Shout out to you, Bill Gates. All right, now we have another good one. Apple. Apple literally just hit another 52-week high like an hour ago, and it's up $4 today. Like I said, just been going up. Had this decent correction here, and then after that, it just clapped back, came back up. I'm not sure. Something happened in December 2018, but I don't remember. I should educate myself on that. And I'm invested in Apple, and my total return is $22. I wish I had enough money to have bought 2 shares when it was priced at $261. Some people have gotten in when it was like $180 and stuff, so they're making huge returns right now. And it's just been going up. And recently, news of the new iPhone and how it's going to have 5G came out, so that might have contributed to its growth right now. And it's just been going up. Last week up $4. Past month, $20. 3 months, $61. Listen, man, Apple is one of those no-brainer stocks for me. Like, I just know millions of people have Apple Watches, AirPods, the latest iPhone, MacBooks, just a whole bunch of products. And they keep on releasing new ones, people keep on buying them. Even though some of them have the same features as the previous counterparts, people still buy them. Stock keeps on going up. Buy Apple. Actually, not yet. Wait for a pullback, because that's what I'm going to do. Next up is Disney. Disney is that TV service, technically now a telecommunications service, because after they changed up the whole sector thing and moved the stocks into different sectors, and it makes all the TV shows that you know and love from when you were a kid: Snow White, Cinderella, Hercules, Lion King. And that's what it's been doing. It has several TV channels, And recently it released a streaming service called Disney Plus, where all your favorite Disney affiliated movies, shows, other animations, Marvel movies, Star Wars, and anything that falls under Disney can be found and watched at any time for just a few dollars a month. And when that happened, that's when the stock had a little jump, and after that it's just been chilling in the 140s, hit 150, and then it just slowly came down after that, after losing some of its initial hype from the announcement. Actually 10 million users signed up in the first day. That's kind of what contributed to this. But before that, it was in the 130s. And unfortunately for myself, I did want to invest in Disney, but I didn't have enough buying power. So I came in at around here, and then it went up here, and I held, hoping that would retrace and keep going up, but no, it kept on going down, so I just sold Disney. If only I was here. If only I'd bought it here, or even here. So those investors that were invested from before November really, really were rewarded. But Disney has been going up, and it has been going up. But I just decided to sell for a stock that paid out a higher dividend. You can see a dividend yield is only 1%. Market cap, 263 billion. Obviously a big company. But would I buy Disney right now? Yes, I would, because it's kind of at a pullback right now. Now, I don't have Robinhood Gold and Morningstar, so I'm not able to see what the fair value is. So it could be lower than this. If you guys have those features, then, let me know. And I'll appreciate that very much. Okay, we have Kronos Group. I've heard of this stock like once, and that was it. Market cap, 2 billion. So it's a pretty big company. No dividend though, and it's in Toronto, in Canada. Okay, so another cannabis stock. Its jurisdictions are in Canada and Germany. And just to reiterate what I said about cannabis stocks as a whole, kind of like Bitcoin, spiked up, and then after that, boom, as you can see right here. After that, 2019, it just plummeted, dropped like a boulder down a cliff. So yeah, I wouldn't say to invest in this stock because, it doesn't seem to have any long-term growth for the time being. For some reason, lots of people on Robinhood are still trading it. Our last stock in the top 10 on Robinhood is Canopy Growth. Who would have guessed? CGC, another cannabis stock. But the difference with this one is that it sells medical cannabis. And it says here the company offers oils, concentrates, soft gel capsules, hemp. Okay, so medical marijuana. Market cap is 7 billion. Not bad. No dividend though. And this is a little different. For starters, this one is actually not less than $10. It's almost $20. And it's still been down. In the month it's up, in 3 months it's down. The year it's down. 5 years. Same story. It's medical cannabis, but kind of in the same boat as Bitcoin and the other cannabis stocks. A spike actually had 2 spikes. Jeez, what happened there? Something must have triggered these. Maybe the passing of legal use of cannabis for medical purposes. Who knows? I'm not sure when exactly that happened, but could have been in July of last year or December of that year. Who knows? Instead of investing in a medical cannabis stock like Canopy Growth, I would rather you invest in a healthcare stock like Pfizer, AbbVie, Johnson & Johnson, Procter & Gamble. There's a whole list to choose from. They're more reliable and they actually pay out decent percentage dividends rather than this. So that takes care of that. The main takeaway I'm getting from this is that these are probably stocks being purchased by new users, or maybe one of the free stocks that are given to them for signing up, and that's what's making them really popular. Because that could be the only explanation. Maybe they're just experimenting with these stocks, and since most of them are less than $20, that's probably why there's more popularity in them. Lots of them are pretty big companies. They have big market caps. Microsoft and Apple are the biggest in this group. They are in the trillions currently. And yeah, guys, these are the most popular stocks. So if you enjoyed the video, leave a like rating. If you disliked it, leave a dislike rating. Subscribe if you're new and turn on post notifications because we got a lot coming for this channel. Alright guys, have a nice day, happy investing, and happy holidays.